What's up, everyone? Excited to give you this video today about Carvana, which has rocketed higher 12% today as the market also moved higher. So we moved above this $20 resistance level, which is where shares had topped out back in February, also where shares had bottomed out in July and June. Once we moved over this resistance level, I did put out a video basically saying that I thought the stock would continue to move higher. And I wanted to wait until we came down to test that $20 level. On the 9th, I put out a video basically saying that we're down at this $20 level. I think we move higher. And obviously we did. So really have, called this stock pretty well. Also, for those that have been watching the channel for a long time, I did call out this stock when it was trading at $6, basically just, going through the short interest data and explaining why I thought the stock was going to have a short squeeze over the coming weeks. Obviously, that happened. So if you're not subscribed already, you should be. Hit that subscribe button. I cover Carvana a lot on this channel. But enough self promo. Let me go into what I have for you today. So, obviously, this $20 level is broken. And for those that haven't been watching my past videos, the reason why this level should continue to hold is because Carvana saw massive volume on the break of resistance. Anytime a support or resistance level is broken and that break is matched with massive volume, it just brings more confidence and validity to that break um, of support or resistance. In this case, obviously resistance. And now that we moved above this level, this $20 level can now be considered support. And when we came down to test it on Monday, obviously shares bounced off this level and moved higher. And interestingly, today we broke to new highs. Over the past almost 52 weeks. Yeah, new 52-week highs. Or excuse me, not 52-week highs, but pretty much 9 months of pricing data. So new relative highs, broke past the high that we hit on the 9th, so last Friday, which is a good sign to me that we're making new highs. With that being said, we still are overbought according to RSI, which could be lending some selling pressure, and kind of helping the bears a bit. But with that being said, in terms of a price target, when I had put out that video on the 9th, I said my price target was about $30. I'm still holding that. And my logic for that is $30 is basically where shares had topped out in June of 2022. It's also where shares had bottomed in September of 2022. And for those that don't know what support and resistance is, it's basically just a level in which buyers and sellers are agreeing on a price. And the more touch points, which is just basically exactly what it sounds like, the price coming down to touch that level and moving higher or lower, um, that just brings more validity to a support or resistance level. So you can see here one, two, pretty strong touch points. You could even, if you're looking at the daily candle, you could go 1, 2, 3, 1, 2, 3, 4. So really 7 touch points there. So great to see that there's a lot of touch points. This level is pretty significant. But with that being said, it doesn't mean that we can't move through this level. In fact, I think we probably will over time. And I really see it as, some if we got some consolidation around 30 and moved a little bit lower, all that would do is it would just allow the moving averages to continue to swing up, which would basically just make momentum more bullish and really help shares move higher at a sustainable rate. Because if we move up, to $60 tomorrow, yeah, it would be awesome. But any person that knows how to read a chart would look at that chart and say that's not sustainable. A nice, steady, easy, or not, maybe not nice and steady, but a logical rise is always better than a one huge bullish candle. I know it doesn't feel as good, especially if you're in short term options. But if you're holding shares, I would say you almost should be rooting for some consolidation around 30 just to let these moving averages swing up to the price and provide more support. Also, we have the 50-day moving average coming up to test the 200-day moving average. This is huge because when the 50-day crosses above the 200-day moving average, it's called a golden cross, which for those that don't know is the most bullish reading you can get in terms of moving averages, and it implies bullish momentum. So if we were to get that 50-day to cross above the 200-day moving average, momentum would be a really in a really really good spot. And just to look at history here, so um, the last time the 50-day moving average crossed above the 200-day moving average, we had saw a 177% run up in the stock over the next, year or so. So that is tremendous. So I am really, really, really rooting for a tiny bit of consolidation. I know you guys are gonna hate to hear that, but that would, if we can just get a sustainable move higher, that will give this 200-day moving average enough time to start to swing up, and also give the 50-day the ability to cross over the 200-day and read a golden cross, which would be extremely bullish for the stock. So with that being said, I'll kind of leave it there on the chart. Um, and I will talk quickly about Google Trends. So obviously, anytime you have as a highly traded retail name, you want to be looking at how much the stock is being searched. And as you can see here, search volume topped out in January of 2023. So that was when shares obviously were in a pretty good spot. Um, that are not in the best spot, but we're definitely moving higher. Um, this is this kind of pump here. So we're not even back to that level of search volume that we had. So that definitely is another bullish, tailwind that we could get if we get search volume coming back to these levels here, early 2023 levels. That will only push shares higher. So as FOMO kind of catches up with some people, and the beautiful thing about some consolidation is it will just drag more retail people in, because they're going to say, oh well, I don't want to buy this stock, it's rocketing 50% every day, I don't want to touch it. But once it comes down a good amount, or a dollar or two, there may be some more retail people that get interested and buy in and start talking about it on social media. So that is also a factor. I know it's not the firmest thing to look at, but I do think when you're talking about a highly traded retail name, it does make some sense to at least be looking at search volume trends. With that being said, I'll also talk about seasonality here. So 5 years of pricing data, and for those that don't know what this screen says, basically this shows the average return per month that the stock has had in its history. 5 years of pricing data here. So we are moving into a very, very bullish time for the stock. So this summer season has the three highest moves on average for the stock. So that's great. We have technicals lining up with the seasonality trends. I think that's really good for the stock. I think that, kind of lends more credence to this bullish thesis. So as you can see, in June, 42 on average, the stock rises 42%. In July, on average, it rises 27%. In August, on average, it rises 41%. So good to see that there. And then when we look at the fall seasonality trends, you can see that they are somewhat bearish. But at the end of the day, we're a couple months away from that, so I'm not really thinking about that too much right now. But with that being said, I will cut today's video short right now. On 6:15, I'm making this video, but I'm going to play some for the next couple minutes of the video. I'm going to play what I covered about a week ago, which is basically just the fundamentals of this stock. So if you're interested in that, stick around and I will play that part of the video right now. In this video, I'm going to explain my thesis for why Carvana could be set to have a short squeeze over the coming weeks based on my fundamental and technical analysis. What you just heard was a video I had put out on Carvana when it was trading at $7 2 months ago. Obviously, we're much higher today, so pretty proud of that and how that kind of played out. So if you're not subscribed, subscribe to the channel. 170% gain since that bullish video I put out on Carvana. This is a really great site, Seeking Alpha. I don't have any promo or anything. I just think it's a good site. But this basically puts the valuation, the growth, the profitability, the momentum, the revisions in relation to the peers. So it compares these stats to the peers and it gives it a grade on how the stock is, kind of stacking up compared to peers. So we can see valuation B minus, growth B, and then momentum obviously A plus. And revisions are A minus, and revisions basically just means how analysts are changing their EPS and revenue estimates. And I'll dive a little bit more granularly into that in a second here. But when we look at the valuation metrics, so EV to sales, first off, obviously the company doesn't make any money, so it's tough to kind of grade them on valuation because there just isn't much available information. But when we look at what we do have for the stock, so we have EV to sales, and we're at about 0.7. The sector median is 1.4 or 1.14, so that's pretty good, better than the sector average, and then the sector median. And then EV to sales is 0.85, which is better than the sector median, and price to sales is also much better than the sector median, which I thought was pretty interesting. So fundamentals, obviously, stock that doesn't make money, but in terms of the data that we do have, it looks pretty good when you compare it to peers. So I will move on to growth here. So revenue growth year over year is down 9%, which is below the peers, and revenue forward growth, and the difference here is forward is basically just the next 12 months. So for the next 12 months, where the company is projecting about down 2%, which is lower than the sector median of up 7%, basically. So not the best sign there. But one thing I loved here was working capital was pretty good. So 32% for working capital, and the sector median is 1.8. So growth honestly doesn't look the best, especially for a company that isn't profitable, to be completely frank. But at the end of the day, it doesn't look horrific either. And I think many people that are trading this stock are likely trading it, not totally based on fundamentals. This was very interesting though. So revisions, like I said, it's basically just the analysts bringing up or down their EPS or revenue targets, and this is just for the last 3 months. So EPS has gone up. Analysts have brought up their EPS expectations for Carvana. 17 different analysts have done that. You know how many analysts have brought down their EPS targets? 0. Very interesting. You don't see that much of a consensus very often when you're looking at these. So I thought that was pretty interesting, but it kind of evens itself out here because revenue up revisions were 3 compared to the down revisions of 21. So it seems like the company is moving towards profitability. Obviously, last quarter, Carvana had its first profitable quarter in quite some time. So that's probably playing into the EPS. But revenue is coming down, likely caused by, kind of the pessimism we're seeing throughout the market within, the consumer discretionary space. So obviously consumers having to pay more from inflation, and really just, having them spend less on discretionary goods and just spending in general. So pretty interesting there. 17 up revisions compared to 21 down revisions. So net, it's 1 down revision, but I think the EPS consensus is kind of the major takeaway from this, and definitely is a bullish sign for Carvana, which you can see all these red E's basically mean that they missed estimates. So their last quarter was the first quarter they had beaten estimates for 1, 2, 3, 4, 5, 6, 7 quarters. So they had 7 quarters in a row where they missed expectations, but during the last quarter, they met expectations. So that was pretty good to see. Definitely like that trend, obviously. So with that being said, I will end the video there. But if you like the video, I would appreciate if you left a like and subscribe to the channel. Thanks. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.